So Amazon's was, this is Q4 and full year, so I thought this was a much more interesting report. I think they're doing a little bit better than they're perhaps being given credit for. They're down about 5% off the back of this report, and I think there was quite a lot to like in here, so I'll run down the figures for you, Steve, and see what you think. Net sales were up about 9%. This brings them to 149.2 billion. That's 13% growth in North America, and it's actually an 8% contraction in international markets. But if you took it on an FX constant currency basis, it's actually plus 5%. Advertising services grew 19% to 11.6 billion. Subscription services up 20% to 9.2 billion. This is your Prime and what have you. AWS grew 20% to 21.4 billion. Coincidentally, if they spun off AWS today, it would be the 47th biggest US company by revenue alone. Interesting little bits on the quarter. There was minus 4% on headcount. I think that's probably quite welcome. They were a little bit overstaffed. Net income came out about 300 million, but this included a 2.3 billion loss in Rivian stock, as we've discussed, and we said it would do, probably over the last year. Full year though, sales grew 9%, 514 billion. AWS grew 29% year on year. A net loss on the year of 2.7 billion, although again 12.7 billion of this loss is Rivian. Operating cash flow is up 1% on the year to 46.8 billion. I would argue this is Amazon's most important metric, the one you should probably keep your eye on. So there's other bits in here, but I thought this report was largely fine. I think we've covered why earnings don't matter at Amazon, although the irony in seeing people who tell you not to value Amazon on its PE, lamenting the fact that it only made 300 million in earnings on 149 billion in sales, was not lost on me last night. Jassy was encouraged by the results, Steve, though. He said, when you factor in our investments in several other broad customer experiences, streaming, entertainment, healthcare, broadband, satellite broadband, etc., there are reasons to feel optimistic about what the future holds. And I think that's a pretty good way to sign off this report. I think that's exactly how I feel as well. How about you?
I feel a bit similar to how I feel about Google here. I feel like this is the Google report, but with a lot more noise built into it. So revenue is up a bit, as you were saying. That net income number, as you point out, is very, very noisy from the Rivian stuff. So it's down from 14.3 billion to about 278 million, which is a terrific drop. When you think that last year was being buoyed by about 11.8 billion's worth of Rivian gain, and this is being sandbagged by 2.3 lots of Rivian loss, it's down about 10% overall, not accounting for that. I was watching Brian Feroldi's video on this earlier. He takes the Warren Buffett approach, and I think that's about the only time anyone can say that about Brian Feroldi, of ignoring everything below operating income because anything else is, he thinks, just stock price movements, and I think he is right about this one for what that's got to do with anything. So, in general, I was pleased by the kind of growth on the services side of this. I think this is the first quarter and indeed the first year that services has become more of the revenue than products. So watching that crossover was quite interesting. When I think about Apple, which we're going to get to, most of their revenue comes through products and only a little bit of it by comparison comes through services. That may shift over time. But seeing good growth on third-party services, subscriptions and ad services, that does encourage me quite a bit.
Yeah, it was interesting to see that. I mean, even physical stores grew for Amazon. I think that's something they're not particularly focusing on. That would be something I would expect to see them potentially try and get rid of at some point in the future. I don't think they like this business a lot, but it still grew at 6%. Third-party seller services grew at 20%. Subscriptions at 13%. Advertising on Amazon Advertising and Twitch grew at 19%. AWS at 20%. And their other grew at 76%. So this is all the satellite broadband, blah, 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 all that rolled into it. So it was a good report from Amazon. I think this is people are forgetting this had a lot of growth over the pandemic. It essentially doubled in terms of revenue, and there is going to be some people who fall away from this business and maybe don't spend as much, or maybe cancel Amazon Prime or don't advertise on Amazon. This is all going to happen, especially as we've seen capital start to tighten up as well. You would think a lot of capital is going into sort of SaaS. The young, hungry SaaS businesses that are trying to disrupt a certain thing, and they're going to go straight into AWS and build their product. When capital tightens and they don't get the cash, AWS doesn't get their cash. But it's still growing at 20% year on year. They were keen to remind us that the vast majority of servers are still in cupboards under the stairs at most workplaces, and there's still plenty of growth ahead for cloud. I mean, we're seeing that. We saw it in Azure. We're seeing it in Google Cloud. We're seeing it in AWS. AWS people were saying, oh, well, Google Cloud and Azure are growing much faster. Well, AWS is much bigger. So that's why bigger numbers are harder to improve by, bigger percentages. And that's all we're seeing here. So again, with Amazon, I thought it was a pretty decent report. I think it's a shame that it's down 5%. It's not down enough to make it an opportunity, unfortunately. But did you have anything else on it, Steve?
There's a couple of things just to partly agree with your thing and partly to expand on one. I'm never really sure what the Whole Foods business is for, which is a good amount of the physical stores thing. I mean, I'm as pro selling overpriced grains to people as the next person is, right? And it sounds like a reasonable business model, but it doesn't have an obviously huge synergy to my mind with the rest of what's going on with the Amazon stuff. I get that it's sort of more retail, and I get that there's kind of fulfillment distribution possibilities here, but that seemed, I've never been quite convinced on that idea. Another one I'm not sure about, and genuinely unsure here, that's not a sly way of saying I don't like it, is the adjusting for FX thing. I mean, I sort of feel like FX headwinds are a real thing. They made less money last quarter because the dollar didn't go their way. That's unfortunate. I guess it's useful to get a read for how volume's going in various ways, and that gives you, I suppose, a trajectory if you think this is going to normalise over time.
I think that's the case, isn't it? I think it's the same thing with your investments when people say, is it a good time to buy US stocks because of the FX? And the answer is, I don't know. So you've really got to take these reports in the same kind of vein, haven't you? Is that have Amazon lost money because solely because of FX? And does that mean next year's going to be better? I don't know. So I think that was the case. It was nice to see Jassy on the call. He seems to have dodged a few calls recently, which was a bit strange. I kind of like to think he would want to be front and centre, if you know what I mean, and deliver these results. They've not been bad results, so I don't know why he's been shying away, but I thought it was pretty good. I think it takes a bit of heat off Jassy. What do you think? I know a lot of people have said he could be in the hot seat, and Bezos was the hint that Bezos would want to come back. I'm not sure if I was Jeff Bezos I'd want to come back. I think I'd be doing a lot of other things other than coming back to work at Amazon. But do you think he's in the hot seat?
Not really. I think if I was Bezos, I'd be doing nearly nothing. I think in the case of Jassy, he gets he's picking up an interesting situation. I think enough people are used to not looking at Amazon's earnings particularly and worrying about how do I work this into a kind of cash flow model that makes sense, because it nearly never has, and trying to piece this together has always been a fairly complicated project. You can come to whatever conclusion you like about that, but I think the thought that clearly net income has fallen through the floor, I think that does quite a bit of blurring of what's going on at the net income level, which is kind of handy for Jassy, but I think that creates too much confusion for anyone to really be particularly militant about anything. What would an activist like a Nelson Peltz try and do? I mean, not him specifically, probably try this idea of spinning out AWS that everyone seems to talk about quite a bit. I'm not convinced anyone's going to make any progress on that.
You don't want them to do it really at the moment either, though, because it is really helping everything else at Amazon grow at the kind of pace that it needs to. So AWS, I think, eventually will be a very good spin out, but at the moment, I think I'd be keen to just keep it where it is. If it does spin out, I'd be very interested in holding it. But at the moment, we'll just have to see, I guess. I don't think it's an immediate concern. I mean, we're never too far away from an antitrust problem, are we? So, and that is one of the things that might help Amazon if they were to spin out AWS. Perhaps that would help them start to make some acquisitions, because they're not as big a business. But I don't know on that. I'm not interested in it at the moment.
I also think it might help them for antitrust purposes if people lazily look at their earnings per share and think, there's not a problem there. They're barely making any money. Who the hell cares?
Yeah, that's it. That's what we want Lena Khan to look at, isn't it? We want her to look at the bottom line and say, these guys are crap. No, we don't need to worry about them. Let's just let them buy whoever they want. Buy Walmart.
Yeah. Yeah.